Now, I picked up a piece of news this morning that I think you might find interesting. Planting progress in the Ukraine is actually a little bit ahead of what it was last year.
Gotta love that.
You gotta love that. So far, they're moving along.
You know, I find it pretty amazing, and I'm a sucker for this, and everybody listening here probably relates to it. But you know, 4 or 5 weeks ago, we really talked about, you know, the impact on Ukraine and the protein market, specifically on wheat and corn, to the world. It seems like mainstream media just got that message last week. So last week you saw all kind of food shortage things, and whenever you hear what mainstream media says about something that you know a little bit about, you realize how much you've got to discount that news on a daily basis on the things that you don't know a lot about, because I was just shocked at some of the news that came out. I knew that you said you were contacted by one of the major agencies and might make an appearance here pretty soon in one, but it's amazing to me how far removed these outlets are from what reality is.
Well, it's interesting how this really kind of plays out in the media, and the different levels of knowledge that you dealing with certain parts of the media. If you're talking to Reuters or Bloomberg, the level of intelligence and what's going on is much different than if you're talking to CNBC, or moreover, like NBC News. It's the level of understanding is completely different, and when you try to impart the understanding, sometimes that can be a bit of an issue. One thing that hasn't come up, but this is something I picked up, I haven't gotten this verified yet, but there's rumors circulating that Germany is going to be strongly encouraging, we'll put it that way, restaurants to take French fries and other deep fried items off the menu because they can't access the vegetable oil. Right. And this is something that is really, this will, even for the best parts of the media, they aren't going to get this. But the Ukraine is a massive producer of sunflower seed and sunflower oil. And in Europe, that is the preferred cooking device. That is what they prefer to use. And that's going to create all sorts of, again, interesting sorts of things going on that people probably weren't, expecting. So again, we try to set expectations based on the past. Typically, people want to know immediately how this is going to play out. We're going to have a lot of loose parts here. This is going to be, it's like kind of guess what the pandemic was going to be like. Trying to guess how this works is going to be similar in that expect the unexpected, as it were. Yep. If we're all playing Survivor here, expect the unexpected. Here's a piece of worthless trivia for you whenever it comes up on your Trivial Pursuit card. But you mentioned sunflower production there in Ukraine. The flag, if you look at the Ukrainian flag, it's yellow at the bottom, blue at the top. That blue at the top is supposed to represent the blue sky. The yellow is for the golden fields of wheat and sunflowers. So when you get that on your Trivia Pursuit card, you'll know what the answer is from this point on. And you're right. We are so many things that we've been accustomed to, and this report's one of them. You made the statement that we're going through an adjustment period in the world. Things like what you just mentioned with Germany, things that we're seeing. You throw in something out of left field like a reoccurrence of COVID in China. Domestic feeding here in the United States is probably going to take a little twist here over the next 3 months. So the world is making pretty major adjustments to what we think is happening. That's interesting, because what we think is happening is usually not how things pan out. So it's going to be really interesting to see how this plays out in the end. And this report, kind of go back to that, Sterling, this report, the things that we have all held as foundational to market movement,
fundamental news in the market, whether it's a supply and demand table, the type of contracts that we market with, all of a sudden, it raises some doubt of whether these things can be utilized in the short term. Now, you and I have talked about it. We believe that they're going to come back in. We've kind of suspended some of that usefulness. But you got to think today's March 31st prospective planting reports might fall under that category of, yeah, it's a big report, but it may not be quite as big this year as it has been in the past. What do you think about that?
I think that's definitely the case. And the real report that's going to matter is the one in June, when we know actually what went into the ground. Because obviously we're going to have weather moving around that's going to influence things. We're going to have, I think, more game time decisions on the farm than we've ever had before. So am I going corn or beans? What am I doing here? If anybody's got optionality, they're going to play that optionality to the hilt. So the June report will be an even bigger deal.
I would like to take a poll, Christy. And I know nobody likes to use this chat column down here, and some people are called in on their phones. Some people I can see are on computers. But I'm just curious, how many believe on this call, when we find out here in 15 minutes, how many believe we'll have a higher number of corn or soybeans planted in the United States? You can put C or B in the chat, or corn or soybeans in the chat. I'm just curious what everybody's ideas are. I know what mine are, but is it going to be corn or soybeans that lead the way? And Sterling, while we get some of this feedback, historically, what's it look like if just maybe soybeans outnumber corn? What's that look like from a historical perspective?
I think we've done that exactly twice in history. 2 or 3 times is all. Right now, the expectation is the corn number is going to be right around 92 million, right with the Outlook conference. And the prospective planning number, what they're guessing it's going to be today, is 88 million, closer to 89 million. So some analysts added in some acres away from what that prospective planning report, what the Outlook conference was. When I submitted my guesses to the media, I put in exactly what the Outlook conference had in, simply because that has been their track record. Now, if they come out here and it's something different, no matter what it is, that will be a bit of a surprise to the market.
Right.
That's the first thing. The second thing is, we'll talk about cotton here for a little bit. Cotton prices have done really well, and they've held up very nicely. Crude goes up, they go up. When crude goes down, it doesn't always take cotton down, and we're trading just below life contract highs. That tells me that the market may think there may be a little bit of surprise and a bullish one for these cotton acres. That's the one interesting nuance that I've seen, along with the fact that the new crop contracts, East corn and November beans, are trading noticeably more independent of the front months than they usually do. Front month corn has been leading heavy on the crude oil. What crude does typically drives it, and we've got crude noticeably lower today. Right now, crude's at 103.48, and that's down about $4.50. There's 2 pieces of news about that are going to matter for the grains. Number one, the president's going to be speaking at 1:30 today, and he's talking about releasing 1 million barrels of oil from the Strategic Petroleum Reserve. I'd like to tell you that's going to make gas prices cheaper, but it's not. We're running at full refinery capacity. They can't use the last. They're just now getting to that last release. So the contracts they're buying right now to go into the gas tanks that you're going to see in May, they're paying an average of about $110 a barrel for that oil. So that, while it will make the crude oil market act a little bit crazy, I don't see that, looking at the entire supply chain, that affecting the pump price. The second thing, the White House is talking about allowing E15 production and pushing E15 production for the summer. If the EPA agrees with it, that could make a difference, but looking where corn prices are, I don't know that that's the idea is that's going to relieve prices at the pump. I'm not really buying that either.
Right. So it's interesting. I think that release is over a course of a 180-day period.
It's 1 million barrels a day up to 180 days.
Which is I've seen some rough estimates on this, and it's really tough to tell because we're basing things on historical use, but that would be about 28 to 30% of to fill a gap of 28 to 30%. So it's got the market on edge today. How long it holds, it's anybody's guess.
And something else that I'd like to point out with where that oil is actually sitting in the strategic reserve versus the regular infrastructure where oil comes from, it's not that convenient to get that stuff into the pipeline. It's not, you're not going to be flipping a switch and turning on a spigot. It's not that simple. So
Right.
It will take time for that to move in to the market. And there's a lot of other things and unintended consequences that can come with this that may not be as beneficial as the White House thinks it's going to be. So that's something that's going to merit watching, and we'll see just exactly how the energy markets actually resolve this.
Really interesting to note that I sit in the middle of what we call the Illinois Basin. So it's a fairly large crude oil production area. It's in the southern part of Illinois, a little bit of Indiana, Kentucky, Missouri, kind of creeps out. I know some of you guys are in the middle of that, but every rig available right now. It's probably a bit of an exaggeration, but I saw a national number of rigs that were up, and we're at about the highest capacity sterling that we've been nationally for a long time. I know within a mile and a half of my house, there's been 2 wells drilled here in the last 2 weeks, and so we're reacting. But like you said, just like releasing strategic reserves, it doesn't happen overnight. But I think we're reacting domestically a lot more than people realize, behind the scenes as well.
Yeah, and that amp in production, it takes time, obviously, to get that online and everything. But at crude prices where they are, that's certainly going to encourage more production.
Right.
But on the other side of this, if we're releasing oil from the strategic reserve, that may hamper production ideas a little bit. I've got the oil from here. I can't refine both. I'm only going to take the oil I can refine. So,
Sterling, let me take something that you just said, and let's take a look at it. I don't want to get necessarily prices off the screen right now. I think we can probably look at what you've got on here. You mentioned spreads. Specifically, and I'm going to go with corn here because I don't know if you can look at a wheat spread and gain any perspective with the craziness in the wheat market. But corn's done something over the last 2 weeks that seem a little improbable. The spread between May and July. We don't have July corn on your screen.
Here, I'm going to bring that up for you here right now, and we're going to share that. So bear with me 1 second.
Considerably. So basically, there's 2 avenues that we can take to look at this. I favor one over the other, but we'll talk about it. That spread just probably 15 trading days ago was as high as 34 cents. In other words, we're inverted. May is 34 cents higher than the July, and you can see what's happened over the last 2 weeks on this chart. It looks like it's got us today at 16 3/4. Is that what that says, Sterling?
16 1/4 right now. It's down a penny and a half today, and I'll make it a little bigger so you can see exactly what happened here.
So we've had something fundamental change in these markets. Now, there's a couple things. When we've seen this in the past, it would signal when you see an inverse that's extreme start to come in, it would signal the beginning of the end of a rally. Let's say it was 2012. Let's say it was 2008, where we saw something like this. However, today's report is kind of one of those points in time where you look ahead to new crop. Today's kind of that first signal of old crop to new crop. And what we have seen in this time is new crop prices have increased substantially versus old following that July. But we've seen December really pop up. Sterling, are we seeing that risk premium go to new crop months or deferred months, or are we seeing the beginning of the end of our rally?
What we're seeing here, we're seeing two particular dynamics. One, we're seeing fund money that's coming in and actually buying corn. We're seeing them come in and they're buying July over May right now. They see that the May is trading, or the July is trading at a discount, so the idea is that they're going to buy the cheaper corn in a market that they're viewing as frozen, meaning it's completely known, and they're thinking that if there's going to be, that continued movement, and the market's going to remain tight, if you can buy the July at a little bit of a discount, you're planning on holding the position, it's smarter to buy July. It just makes sense. And we're not quite to a liquidity shift, but July's liquidity picked up. Now here, I'm going to put up a chart here of the December-May spread, which is commonly known in the industry as the widowmaker. You don't trade this because it's a good way to die. And you can see that spread, old crop versus new crop, has a similar deviation, and a lot of this, I think, had to do, it's December improving relative to May is what's driving the narrowing of this spread. It's not May running away simply because I think we've had some speculative movement into July.
And here's what's interesting about this, and I think you've got KZ pulled up, or the May-December spread. I think if you went back 2 weeks ago and you use logic as your approach here, you see the commercials starting to bid off of the July, a little bit less volatility out there. So your elevators that you're selling into had put producer sales or hedges off into the deferred. We saw spec funds who usually like to stay in the upfront month look like they were going to bolster their position. I think 2 weeks ago you'd have taken a look at this and said, logically, this inverse will grow. And wow, have we seen just the opposite. It's pretty amazing. That's what Sterling calls the widowmaker. You can use all the common sense in the world on this, and you would have been taken here for, just about 70 cents. So a very, very tough situation on this spread that he's got up right now.
Yeah, this is something. If anyone tries to trade this when I was at CHS, that's a good way for an elevator manager to lose his job. And if you're trading the market and trying to make a nickel, it's a really good way to send your money away, because I've seen this spread move limit against both ways, where 1 month is limit up and the other month is limit down. I've seen that happen. Right. So this is don't try this at home, folks. We'll just put it that way.
So today, within minutes, within days, like I said, this is your transition. We start looking at weather. We're looking at some positive things happening in the Southwest with a little bit of moisture down in Texas, Oklahoma. But we're seeing some negative things happen in the deep South and the Delta, where we were off to such a good start a year ago down there. Super, super wet conditions. It looks like those conditions are going to stay. And I don't want to take away from the luster of this report, but you can kind of see where I'm leaning here. I think within days, we're back to trading weather rather than this acreage report. By the way, Chris,
I don't even think it's going to take days. I think it's going to be report comes out 11. I think by 11:15 we're going to be back leaning on weather, and everyone's going to be clicking around the news channels trying to figure out what's going to go on with the Ukraine, which right now it's a futile exercise, because the bottom line, for this to really drive the market, they can plant it, they can harvest it, but if they cannot move it, it's the same as if they hadn't planted it. And we don't know where we're going to be in 3 to 6 months.
Right. The spirit of the farmer, I think it probably transcends continents here, from the standpoint of, and maybe it's the spirit of the business person. If a farmer owes money on an operating line, owes money on equipment, owes money on land, you're going to scratch and claw to get that crop planted. If I'm in Ukraine, the demeanor is probably similar to what it is in the United States. And so, we've talked about Ukraine in 2 meetings now. We had a special meeting. Yeah, it's unknown whether we can get that crop to market. That's the biggest question. I'm going to say we'll be surprised at the number of acres that get planted in Ukraine. Whether they get tended to like they can with fertilizer and chemical, that's anybody's guess. But I think the farmers there will make their best effort to put something in the ground. Whether it gets harvested, that's the big unknown. And I think that's important because I think most of us 3 weeks ago, we had to black line out that production. We had to mark it out. We had to assume it wasn't going to be there. And when we say that in entirety, I think there was that real chance. It's going to be real interesting to see if we change that perspective at all.
Well, right now the European agencies, the European people like Strategy Grain and a couple others are thinking, maybe we see half. Yeah, that's the current thinking, and the market is kind of penciling that in. But if you've noticed, wheat prices have kind of calmed down and stabilized a little bit. So we're past the panic section. Now we're fully in a state of ignorance, really, about where it is. So I think you're going to see commercial entities securing supplies when they can, being willing to pay up to secure those supplies, and a lot more hand-to-mouth sort of things. And what this means at the end of the day for the consumer is it's going to be just like the oil. Guess what? Prices are going up.
So, Christy, did we get anybody reply? Are we corn or beans out there? What's the perspective of our group?
Well, I'm laughing because it's a tie.
Oh, really? Okay. All right.
I went back and checked it again, and it's a tie.
I probably should have asked this question. So we're divided 50-50 on corn and beans. I think if I'd asked this question, how many believe that corn acres will shrink from this report over the next 60 days? I would say I had a lot of hands raised. I guess that's my perspective in this thing, especially starting off a little wet in the south, looking at the forecast for, that Missouri, Kentucky, Southern Illinois, Southern Indiana. We're kind of that second tier to plant. Looks a little wet. We've got lots of moisture right now, more rain coming in next week. I guess my perspective is Sterling corn acres may be overstated here in just a few seconds, but we'll see. See.
That I think is entirely possible, in that when they come to the game time decision, depending on where they are with their input costs, it might just be easier to plant soybeans, assuming they have seed and everything readily available. And we're 2 seconds from release here, and there we go. Wheat ending stocks 1025. Corn stocks came in as expected. Soybean stocks a little bigger than expected. And corn acres 89.49. So there's your big deviation number one. Soybeans higher at 90, right at 91. So market reaction. May corn is here. Let me see here. We don't need to study those numbers. We need to watch what's actually happening here. Let's go ahead and switch to the other screen. And there you should be able to see the prices now. And you see May corn up about 27. Soybeans getting hit a little bit on this. Corn probably going to chase the limit up here. Wheat prices jumping nicely on that. The wheat stocks number came in at 47.35. That was pretty much in line with expectations. Our friend cotton came in at 12.23, which was again right in line with the expectation. So, big takeaways. They're saying more corn, and they've deviated from their previous behaviors. That's the biggest thing. And soybean acres clocking right at 91 million.
So net, just to kind of put this in perspective, maybe a few new acres of corn, soybeans out there versus last year. I think we're about 180.4 last year, if my math is right. Just a smidgen more, but not a big change there.
Well, actually, if we had 91 and 89, it's 180. So that not losing wheat acres, not really. That's a bump up actually in cotton acres from last year. So we didn't lose any wheat acres out of this at all.
You really, we're watching this tick live here, up 23 to 26 on corn. Beans about even right now. Cotton is probably the one that's getting hit a little bit more than expectation. Sterling, what are the odds? We saw, in my opinion, it was political posturing last week when we talk about a world food issue. I mean, we've known that for 4 weeks, and mainstream media reports next week. Is there a chance we could potentially release Western CRP acres for maybe wheat, soybean? I mean, I got to think most of these acres are going to be wheat, soybean acres. Is there any political posturing, in your opinion, that's saying, okay, maybe we've got 5 to 10 million acres that could be released? I would think they'd have to be released relatively quickly if that was going to be the case. But
if they wanted to release them and really make it effective, they should have released them already. Because,
right.
you know, if those acres become available, you have to get them planted, you have to get that ready to go, and guess what? We're not quite on the clock for planting here in Nebraska, but people have got the clock out there. It's all polished up and charged up and ready to go. So that would be something. Again, political posturing is political posturing. How many effective acres we actually get out of that? And I would have to think that that's most likely going to be soybean acres. Again, you really have to kind of question, you know, how much difference it would really make. But politically, it might make a difference, so we could see that happen.
I've been getting a couple of texts here, and the questions were about our spreads on corn, what the market's telling us to do. A couple things here. Corn demand. Again, 2 weeks ago, everything's changing. I think Sterling said it best. We're operating out of ignorance in some regards at this point in time. 2 to 3 weeks ago, we felt as if exports out of the U.S. were going to just absolutely sing, especially on corn, over the next 2 months, 3 months. That has not been the case. We've seen big changes there. Whether it's a material change in China due to COVID is unknown. We do know that we've got what looks like an excellent corn crop in South America. We saw basis levels in South America fall 50 cents over the last 10 days. Now, before everybody gets too worked up, we had some really good values in the export market in New Orleans. We had CIF trade well over $1. The problem, if you remember, our third Thursday marketing meeting is we had barge freight that was extremely high. That barge freight should come down. It should work its way down. It's still going to be high. It's going to be higher lows than we normally see. But if we look at this spread, it's illustrating exactly what we talked about prior to the report. If you look at the screen right now, you see May up 20 cents. You see new crop up 25. It appears that old crop corn is starting to lose its luster versus new crop corn. If you are in a situation, or your customers are, where they have corn on the farm, they're flipping a coin whether to take it to market. It certainly looks like to me this market's telling us it's an okay time to sell old crop corn. New crop corn, we've got 3 months of weather market in front of us. We should see volatility there, but old crop, this market's starting to tell me with spreads, with what we're seeing in demand from an export side of things, it may be a pretty good time to get rid of some of that length.
I would definitely completely agree with that. I think the way the old crop corn is behaving, it's behaving like a known entity. It's trading with less volatility than the bonds sometimes. So it is a known entity, and your upside might be limited. You might see some basis advantages coming in. That's something else. If you've got good basis at these prices, you got to let it go. Really let it go. When it comes to the export situation, this is kind of something I haven't dwelled on too much. This is a huge number for soybeans, and that's almost all old crop. We have seen a lot of very good buying in old crop soybeans. And right now, inspections in the movement, everything's on corn. Inspections are down. The general movement of soybeans is lower. Well, soybeans get a little second season for exports when we start to move into June and July. There may be, we may find ourselves moving soybeans at a pace better than what we anticipated. We're certainly seeing the old crop sales coming in right now, and that's something kind of a bogey to keep on your screen there that you could see, particularly old crop beans behave better than old crop corn.
Right.
Hey, Sterling,
Right.
Sterling, on soybeans, that is a question that's come in. Just curious about that. Is there a chance that the market will think that number is really kind of crazy and that maybe the bean number could tank?
It is conceivable. We all know farmers love to plant corn. The pluses for the soybeans are obviously the input costs. That's number one, because that's another way to contain risk. But again, until the tractors roll, these numbers are guesses. They're estimates. And weather can change that. And if you were thinking you're going to plant beans, you see a window to plant corn, and we suddenly see December corn trading with a 7 handle or a 7 handle and change, which is entirely possible. That's only 15 cents. There's always a chance that these acres are going to shift around a little bit.
And to kind of illustrate your point here, Sterling, that second demand that you're talking about in beans, those are old crop beans. And take a look at the bean spreads that we're seeing trade on the screen right now. We're seeing, we're weaker in the November than we are in the upfront month, just opposite of what we're seeing in corn. So it kind of backs what you're saying there, to fill that back end gap that normally comes out of South America in June, July, August. It may be replaced with some old crop U.S. soybeans.
And something here, I want to pop up a chart here real quick. We're going to look at soybean export inspections real quick here. And that. And what I'm talking about here is, I have to switch screens away from the quotes here real quick. I'm going to go ahead and switch this to screen 1. This is a chart of soybean inspections. And as you can see, we harvest, boom, 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 out go the beans, and we wind down. But then as summer approaches, you notice we kind of crater right around the middle of April is the typical low, and we start to pick up. It's entirely conceivable that we could see this line move a little more like this based on what we're seeing with export sales right now.
Yeah, so that convergence plays a lot. It has a lot to do with the basis levels that you see out there as well. Probably the earliest that we've seen this occur over the last 10 years has probably been July, I'm going to guess, maybe August. The latest we've seen this is basically U.S. beans come on the world market is as late as November in the past. So what it shows us is generally, the higher the demand, the smaller the South American crop, the earlier we see U.S. beans step into the global market. And could be as early as June and July, like Sterling mentions.
Yeah, particularly assuming we have the beans available. And two, through all of this with the acceleration in grain prices, we have to talk about what our feed number is and how that feed number is going to behave. And that's something that's probably going to be an issue. How much we cut it and how it adjusts is going to be, something that we're going to be watching. But I'm at least I'm personally convinced that we are looking at higher protein prices coming into the fall across the board, be it beef, pork, or poultry. The pork market's playing it out right now. We can see if you look at the spread between nearby hogs and June hogs, you're looking at 25 cents, which is quite a lot. And we're probably looking, fed prices are a little bit weak right now for feeders. Live cattle have been holding 140, but I've noticed cutouts have picked up about 15 or 20 cents. Seasonally for cutouts, we are at our lowest levels, are just coming out of our lowest levels right now. And as things warm up and grilling season starts, we're probably looking at higher cattle prices and things, and we're going to see a drop-off in feed demand that will pick back up, hopefully sometime in 23.
Got a question that's coming through, and I know we want to wrap up here relatively quick. It's talking about wheat and the tradability of wheat. And I think the question is basically, how do I trade wheat as a producer at this point in time? And Sterling, 2 weeks ago, the week before you were gone on vacation, you wrote about you used the word untradeable in regards to wheat futures. And I know that was an exaggeration, but here's what we cannot do as producers right now. Traditionally, we have utilized futures only contracts, and we have waited to set basis. We've waited for, if we saw an $8 futures only contract, that's historically been a pretty good number going into this year. There's a lot of people that have got customers that sold $8 and $9 futures only contracts. This wheat market is up again today. It's extreme. And this is something that's bothersome to me, because all of our traditional marketing advice has to be suspended for a time. To make a futures only market in this wheat, it could be catastrophic. And like I said, we'll return to normality at some point in time, but in the wheat market right now, you have to stick with a priced contract. So in other words, you have to know that futures and that basis to know what you're taking in as a farmer. Let me illustrate it real quick. You like the number today. What do you got on here? $10.69. Let's just say, as an example, that's the chart we're looking at on May wheat, 10.66. If this thing goes to 13.66, which it can do it in days, you may be looking at a basis of $2.50 under. We illustrated that a few times. So when you think you're locking in someplace close to 10.66, you get to subtract that wonderful basis off that price. Price contracts, long puts. The puts give you a floor with unlimited upside. We have to suspend some time-tested marketing tools at this point in time. Honestly, I think you suspend the futures only. I think you suspend the min-maxes. I think you suspend the freeways that we talked about. So good question.
Yeah, anything where you have upside risk in the wheat market, particularly if you're doing Chicago wheat, there's been a known deviation and a lack of convergence within this market, even with the VSR in place. And when you see, you get 3 days of limit up here, followed by a day of extended limit down, that's more than most people can really stomach. We have gotten a little bit better here, and seeing prices move up today. Again, this is going to be a news-driven market, which will be merciless. Very soon, this is going to become a weather-driven and news-driven market, which is really, really rough. In a futures contract, now remember, we don't deliver much of this. This does not necessarily have to be that anchored to where cash prices are, particularly your local cash price.
Right. Well, good stuff. Any questions coming through for us, Christy, as we wrap up?
Yes, actually, just a couple. There was one, and I'm guessing they're just wanting an overall. Any thoughts on December 2023 and November 2023? And you may have covered that, but I just want to verify.
I'm gonna answer the question, and this is not from a technical standpoint, trading standpoint. If you're asking from a producer standpoint, which I think is how the question comes across, whether an agent asks that question or a farmer, until we get a grasp on the expenses that we've got for those two crop years, right or wrong, historically they're awesome prices, and you ask yourself, how can I pass these up? Go back to that commentary we just had on wheat. You won't get a good cash price out of any elevator to sell that into. There is no basis being traded to speak of at all. The other thing is we think we have seen inflation. We think we have seen inflation. The stronger the efforts are by the federal government to hand out money to help in an inflationary situation, simply adds to the angst. We may not have seen inflation yet. Until we get an idea of where those expenses are at, until we know what cash prices are, I don't think you can touch those deferreds, and despite how good they are.
And looking at here, this is December 23 corn, 622 by historical norms. Those are really great prices. This number right here is the open interest. That's the number of contracts in existence. Yeah, we traded 3,500 today, but there's only 607 contracts in existence. I've traded bigger than 600 lots myself. That is not that much. So if you get into this and you have a problem, let's say this stuff you're short of future, and something goes bananas, and this stuff, it may be very painful to try and correct that or get out of it. So we can't really. I want everyone to watch and pay attention to 23, and believe me, I'm watching it too, because there may be some very good and very special opportunities with this, but those are months and months away.
Yeah, that's a tough one, and it's hard not to want to sell 620 corn. I know, I get it, but when you don't know what a gallon of diesel is, you don't know where seed costs are going to be, chemical costs, fertilizer costs are going to be. It just adds to the uncertainty and really adds to your risk overall.
Yeah, the risks that we're seeing here in 22, we're not even really trying to digest what the potential risks really are going to be for 23, because the fertilizer question is the next thing. And we might be looking at a regimen, conceivably, where corn could be at these higher levels if things go really south in the Ukraine and they end up with that black line through that. These prices are going to stay elevated until you crush out enough demand to take them back south. So,
Christy,
Okay.
we got time for one more. You got another one for us?
Yep, and I think it kind of goes along with our next meetings. It's just verifying that the planted acres, we will not address that again until the June 30th report, correct?
that
You'll
is
have
mostly. Go ahead, Brooks.
You have a lot of private estimates out, over the next few weeks as technology gets better and better. We get a better handle of what's going in, but officially, yeah, we're looking at June 30th on that from the USDA release standpoint.
Yeah.
And go ahead.
The May WASDE typically uses the numbers for the prospective planning report that goes onto that. However, as we saw today, old practices do not necessarily mean that's going to happen. It is conceivable on the May WASDE that we could see different planted acre numbers. It is entirely conceivable. There's no rule that says the USDA can't make those numbers different from the numbers we saw today. And that is another possibility, especially if we see some dramatic weather behavior.
Yeah.
We will have a live report though on June 30th. We'll do another one just like this. And so be sure that you are watching for our DMO. We'll have a presentation just like this that will be recorded. We do have our April WASDE coming up on April 8th. It is a Friday. And that will be at 10:45 Central Time. Did I have that right, guys? 10:45 Central Time.
Mm-hmm.
And then on the 21st of April is our April marketing meeting, and that will be at 9 a.m. And then, of course, as Sterling said, we have our May WASDE, which may have some of those planted acres that you were asking about. So we do have all these meetings coming up with that June 30th meeting as well. So watch for that DMO to come out, and we have lots of other great information that is included in that. Are there any parting thoughts, Sterling and Brooks? I mean, this has been a great report. You guys have had some really good information.
In terms of both of those WASDE reports, it is conceivable that the USDA could change their export expectations for the old crop. That will have obviously implications for the new crop, so that's something we need to watch for, besides the potential for a change in planted acreage in May. So usually the April report doesn't bring a lot of surprises. I'm not going to say anything about it because famous last words like that always get me in trouble.
You can sum this one up, Christy, a time period of adjustment and ignorance. I think those are the two words you can pull out, because there's just so many what ifs out here that I've never encountered anything like this in my career, even through the big drought years, even through the ethanol mandates. This is certainly the perfect storm of so many factors that it's hard to even key on one, much less guess how 5 or 6 of them can combine.
And we're still looking at a potential La Nina here in the upper Midwest. So, I hate to bring up the D word, but we can't throw it out.
Yeah, that's right. That's right.
Folks, now's the time to make sure that you have the experts on your team. So if you're not sure, make sure you reach out to us. You can reach us at that marketinginfo@sompointernational.com if you have any questions. Contact your ASNA representative or reach out to us, and we'll be sure to answer your questions as best as we can, and we'll get you with the right people. So don't go into this season not knowing what to do. Thank you guys for being with us today, and have a wonderful, wonderful weekend. Take care.